Alright guys, in this video, in this lecture you could say, we are going to learn about SMT divergence and how you can trade with SMT divergence, or you could, add SMT divergence in other trading strategies as a confluence, okay? So we're going to trade SMT divergence, or you could say smart money technique divergence. All right, this is a very powerful tool that you can use, and it's gonna increase your win rate by a lot. You can use it as a single strategy by its own. Like, you could use this single thing by its own and you will be shocked, right? Or you could add this as a confluence with other strategies and it's gonna work perfectly fine as well. So what is an SMT divergence, or you could say smart money technique divergence? So for this strategy, you need 2 or 3 correlated pairs, okay? The pairs or assets or instruments that have similar movements, they have correlation between each other, right? So for example, Bitcoin, right? BTC and Ethereum, they have similar movements, right? If Bitcoin is going up, Ethereum should be going up as well. If Bitcoin is going down, Ethereum should be going down. And then we have NAS 100, S&P 500, and US 30, right? So these 3 pairs have similar movement as well. Now for forex, you could use, your USD, GBP USD, AUD USD with dollar index DXY, right? USDX. Now what is DXY? It is a dollar index. It shows the strength of a dollar, right? So so you can use like Bitcoin and Ethereum. They have correlation. NAS 100, S&P 500, and US 30. You can use Euro USD, GBP USD, AUD USD with, right? So you don't want to use Euro USD, GBP USD, right? Together. You don't want to use Euro USD, GBP USD, or AUD USD together. You want to use one of these with DXY, dollar index, okay? Yeah, you can just simply trade with these instruments and pairs and assets. So let's talk about what SMT divergence really is in detail. Okay, so let's assume that let me draw this out first. All right, so this right here, let's assume that this is S&P 500, okay? And this is NAS 100. Cool. So notice this, right? On S&P 500, we have higher high, higher low, higher high, higher low, higher high, right? On NAS 100, we have higher high, higher low, higher high, higher low, and then NAS 100 fails to create another higher high. So I will repeat it again. On S&P 500, we have higher high, higher low, higher high, higher low, higher high, and on NAS 100, we have higher high, higher low, higher high, higher low, and then NAS 100 failed to create a higher high, whereas S&P managed to create another higher high. So what does this tell us? This right here, for me personally, is a liquidity sweep, right? This right here. Why? Because on NAS 100, price couldn't make a higher high. What does that tell me? It tells me that the order flow has shifted into a bearish trend, and this right here is a liquidity sweep. All right, why? Because NAS 100 could not make another higher high, But this S&P 500 did actually create a higher high. This tells me there was a liquidity sweep. So now what we can do is, let's suppose that you are looking at S&P divergence on a 15-minute time frame. Once you have the liquidity sweep, right, and you see that the other asset or pair could not make a higher high, and this pair, let's say, made a higher high, you drop down to the 1-minute time frame. If you're looking at a 15-minute time frame, you drop down to 1-minute time frame after liquidity sweep, you wait for market structure shift, and you take your entry from the extreme fair value gap. It's really that simple. So you can see that S&P 500 managed to create a higher high, but on NAS 100, we could not make a higher high, which tells us that the auto flow has shifted into a what? Into a bearish trend. You want to trade the pair or asset or instrument that has swept the liquidity, right? You do not want to trade this. You can trade it because the movement is going to be the same, okay? So if NAS is going down, this should go down as well. But I recommend that you trade the pair or asset that sweeps the liquidity, because you are going to get a better risk reward entry. So in a bearish scenario, let me remove this. We have, let's suppose, lower low, lower high, lower low, lower high, and lower low, right? And on NAS 100, we have lower low, lower high, lower low, lower high, and then we fail to create another lower low. So right here we have divergence, SMT divergence, all right? S&P 500 managed to create a lower low, but on NAS 100, we could not create a lower low. So what does that tell us? According to my rules, all right? So it shows that the auto flow or the momentum has now shifted into a bullish trend, okay? So we did create a lower low on S&P 500, but we could not create it on NAS 100. Or similarly, if you just switch these pairs, right, like this, or sorry, assets, it doesn't matter, all right? You can trade any one of these pairs. You should trade any one of the pairs or assets that sweep the liquidity, right? So let me put this here just so you don't get confused. So once you see that NAS 100 or any other asset or pair has failed to create a lower low or lower high, you then wait for liquidity sweep on S&P 500 or any other pair or asset that you're looking at, and then you trade that pair or asset that swept the liquidity. After the liquidity sweep, you look for market structure shift on a smaller time frame, and then you take your entry from the extreme fair value gap or auto block. So I will try to give you guys some examples, and I'll also give you some techniques that you can use with this strategy to increase the win rate. All right, guys, so here is example number 1. I'm looking at Euro USD and dollar index. So when you, specifically for dollar index, when you are going to put it on your chart, it's going to look like this. It's going to be inverted, unlike Bitcoin, Ethereum, NAS 100, and S&P 500, or any other correlated pair, right? So if you don't want to get confused, what you can do is press Alt plus I, okay? Alt plus I on your keyboard, and it's going to flip the chart upside down, and then it's just going to make, it just won't confuse you anymore. So here's an example. We took this trade in the community as well. If you're watching it, I shared it in the mentors chart channel of the Discord. So what did I see here, right? So as you can see on the Euro USD, we had this high, right? And we created a higher high, higher low, and then this right here, right, is a liquidity sweep. However, if you look at it here, price did not manage to break this high, right? It did not manage to break this high here. So what does this tell us? Now this tells us two things, right? That the auto flow has now switched into a bearish trend. And over here, what you can see is we have a liquidity sweep, right? So once you have a liquidity sweep, what you can do now is you can go back to the 1 minute time frame on Euro USD, right? After liquidity sweep, and you wait for market structure shift. Simple as that. So right here, what we have is a market structure shift. Also, we have this structure break, right? So we have a break of structure as well. This right here is an extreme fair value gap level that you can look for an entry. You can take your entry from this extreme fair value gap, put your stop maybe above the first candle of the fair value gap, or maybe above here just to be on the safe side. And I remember we targeted this low here, but we could have targeted this level here as well, because this is an ABC formation, and on the ABC strategy, as we know, we target this level as our take profit. So if I play this through, you're gonna see that we got our entry, right? And if I play this through, you can see, just because we knew that intraday bias, we knew that the order flow has shifted on, you know, the dollar, and we knew that the Euro USD had swept the liquidity. We took this entry and look at that beautiful move. This is like textbook example of this strategy or technique that you can use in your trading. So right here, I use this technique with ABC strategy. You can use it as a standalone strategy as well, and it's going to work perfectly fine. It doesn't have to be combined with any other strategy. It can work just absolutely fine. But please keep that in mind. I can give you the best strategy in the world, and it will not work for you if you are not going to backtest it. It's just not simple. Forex is not simple, guys. Trading is not that simple, okay? Yeah, the strategies that I'm teaching you are simple, but they require backtesting, okay? They're not just like you're going to start using them on a real chart right now and you're going to make profits. No. Yeah, maybe if you get lucky, but if you don't know the movement, right? If you don't know your pair, if you don't know the asset that you're trading, you don't know the movement of that asset, all right? You're going to fail tremendously. So backtesting is a must. At least test 100 times for your own sake, okay? So this was a perfect example. We got 6.81, and notice that we are in a New York session around here, right? So make sure your entries are during kill zones or, you know, a New York session, preferably. You can trade in London session as well. Make sure you don't trade Asian, all right? It's just not reliable for me. I mean, it can work for you, but it's just not for me. So I only trade London and New York. So this was an example number one. We used Euro USD and dollar index. Now, similarly, if you have a liquidity sweep, right? And let's say you have a liquidity sweep on Bitcoin, and you don't have a liquidity sweep on Ethereum. It's just, and the Ethereum is telling you that the order flow has shifted in a bearish trend. You can trade Ethereum as well, because Ethereum is now a weaker, or you could say weaker in terms of bullish, right? In terms of bullishness. So you can trade that pair as well instead of the one that swept the liquidity. But notice that how we got a greater risk to reward ratio, because we traded the pair that swept the liquidity. So I hope that clears that doubt. So let me move on to the next example. All right, this example is for crypto bros, right? So we are looking at Bitcoin and Ethereum SMT divergence here. So on Bitcoin, you can see we have a higher high, right? We have a higher high, higher low, and then we have a liquidity sweep, right? But over here, you can see if we measure from this candle, right? You can see that price failed to break the high of this candle and also this high, right? So this clearly shows us that the order flow has shifted into a bearish trend. After the liquidity sweep, you can see that the candle that sweeps the liquidity, you want to point your cursor towards that candle, and you see if it has swept the high on Ethereum as well. In this example, it has not, right? So after the liquidity sweep, what you do is simply go back to the 1 minute time frame. If you are looking at on a 15-minute time frame, right? And you look for extreme fair value gap. and the extreme fair value gap is around here, you can see, and I can use this whole candle as my stop loss. I will put my stop here, and I can look to target maybe this fair value gap here, right? There's this fair value gap here, or I could target this low here as well, or I could target this low here as well. So let's target a 3.5, or eventually just do, actually let's do this, right? So you can see we have our entry after liquidity sweep, and it just melts like a candle. Just goes down and it hits our take profit, right? So look at the power of this thing, right? You knew that your short-term bias is bearish because of the SMT divergence, right? And due to that, you managed to win this trade. It's really that simple. This is a very, very powerful tool that you can use. So you can see that we had a small divergence here, and over here you can see that we failed to create a higher high. So this tells us only one thing: you could have traded this as well. You could have looked for a fair value gap around this level, or maybe here, and then you took a trade here. But I recommend, as I always said, recommend that you trade the pair or asset that sweeps the liquidity. That was a beautiful trade, right? As you can see, it works with crypto as well. If you're using Bitcoin and Ethereum, right? Because they have similar movements, as you can see. So, and also notice that this was also an ABC strategy, right? So we had an ABC pattern, and then we had a divergence. Auto flow shift on Ethereum. This tells us that the momentum is moving to the downside, right? The Ethereum is now weaker in terms of being bullish, right? And this right here tells us there was a liquidity sweep. So we trade this and we write it down. So this was example number 2. As you can see, it works with crypto as well. And yeah, guys, let's move on to another example. All right, guys, in this last example, I'm going to show you how you can use 3 correlated pairs together in order to trade. So we have 3 correlated pairs like NAS 100, Dow Jones, US 30, and S&P 500, right? So you can look at 3 of these charts, right? 3 of these, you can look 3 of them, right? And look for the one that sweeps the liquidity out of all these 3, right? So you can see over here we have higher high, higher low, higher high on NAS 100. So yes, we swept the liquidity here. Over here you can see this, right? If I measure from this candle, we could not break this candle high here, just like NAS 100 did, right? You can clearly see that this candle on US 30 price failed to create a higher high. It just kept on going down. This right here, this exact reference candle, this right here, right? That swept the liquidity. You move your pointer to that candle and look at this candle. It did not sweep the liquidity. So we can trade this pair. Also, if you look at S&P 500, you can see that S&P 500 also swept the liquidity, right? So you could trade this pair as well. It's that simple. If this one pair is showing, weakness in bullish direction, you can trade the other pairs in the same momentum, right? The bearish momentum, because the auto flow has now shifted into a bearish trend. So you can trade this and this as well. So on NAS 100, after the liquidity sweep, if we go back to the 1 minute time frame, we look for market structure shift, and it happens right here, right? It happened right here, you can see. So now when you have a fair value gap this big, right, what you can do is go to the higher time frame like this, and it's going to show you another fair value gap, which is right here. If I go to the 3-minute time frame, all right, so the 2-minute time frame is this fair value gap. And to further refine your entry, what you can do is you can use your Fibonacci from the start of the fair value gap to the end of the fair value gap, and you can take your entry from the 0.5 level. Yeah, out of 10 times you're going to miss your entry 2 times or 3 times, but you're gonna get a better entry, right? So we could take our entry from here. We can put our stop loss at the top of the fair value gap candle. Let me remove this, and let's wait for our target to be made. All right, so I think we have a target here, which would be this low here. So let's see how this plays out. All right, so we get our entry, right? And if I play this through, you're gonna see that we eventually go ahead and hit the take profit level. So this is 3.56. If you took a refined entry, right? If you took your entry from this fair value gap and put it here, this would have been a 1 to 2.28, which is really nice. So this is how you can use combinations and look for divergences and trade SMT, guys. So I'm going to give you a little bit of tips that you can use to even increase the win rate of the strategy, right? So what is, as in my previous course videos, I have taught you guys premium and discount zones, right? So let's suppose that on a higher time frame, like the 4-hour time frame or a 1-hour time frame, price direction is bullish, right? So price is continuously making higher high, higher low, higher high. So when you have a higher high, higher low, and then you have a new higher high here, you use your Fibonacci from that new higher high, right? And you wait for price to come back into a discounted zone. So now when the price comes back into a discounted zone, then you can look for SMT divergence around this level on a 15-minute time frame, right? Now that is going to increase your win rate by even more. So notice what I have explained here. You use premium and discount with SMT, and it's gonna increase the win rate. All right, if you are really serious about doing that, because sometimes when I tell people about using premium and discount and using like a higher time frame confluence, they just don't want to do it. Why? Because they want easier way to trade. But if you just implement this little thing in this strategy, it's going to increase your win rate. Okay, so you look at the higher time frame. So let's suppose that this is a 1-hour time frame, or let's do 4-hour time frame. Okay, so price is making higher high, higher low, higher high on a 4-hour time frame. You know that the market structure is bullish. Now what do? You wait for price to come back into a discounted zone below a 0.5 level, and then you look for smaller time frame SMT divergence. So let's suppose that you are looking at Euro USD here, right? So you're looking at Euro USD. So on Euro USD, you have liquidity sweep, and on DXY, dollar index, what you have is a weakness. All right, so you have a weakness in DXY in terms of bullish. So now this is going to, like, oh my god, this is going to be like the best entry that you can take. Okay, so sorry guys, I have flu at the moment. So yeah, so you notice how we can implement PD areas, premium discount areas, into our trading, and it can work like a charm. And let me think what else comes to my mind. So make sure that you are, trading during kill zone hours. All right, you can go into the indicators tab and you can just type in ICT kill zones, right? And there are so many indicators that you can use. So let's say ICT kill zone boxes, this one right here. And now you can trade within these kill zones, right? You should get the entry within this time period. So you can use like a higher time frame structure, PD array, premium discount, right? SMT divergence on 15 minutes, right? And smaller time frame market structure shift with fair value gap, and you take your entry. So this is like a whole model that you can use to trade. You can, yeah, of course, you can use this as a standalone strategy as well, the SMT divergence. But if you just add these things together, because, you know, you gotta do a little, you gotta just add these things together and combine them together to create your own strategy, all right? Like if every single person starts using the same strategy, right, it just makes no sense, because everyone is going to be a millionaire, right? So it's just going to destroy the economy, and everyone is sitting with $1 billion in their bank accounts, right? There is no perfect strategy, guys. The perfect strategy is only when you backtest it and just, you know, change the strategy in your own way. You just create that strategy in your own way by back testing, forward testing, and, you know, just journaling each and everything. So I will end this lecture on SMT divergence right now, and we are going to move forward with our course videos. If you have any questions about the strategy, you can ask me in the Discord channel. And if you didn't understand anything, please rewatch the video, and I'll see you guys in the next video.